Hey everybody, this is Jose here. We're about to start in like 20 plus seconds. Please, as a confirmation that you hear my voice, type something on the comments box, please. Like a quick hello, quick how are you, quick ready, something like that. That will tell me that you hear me and therefore we are ready to start. Very good. Perfect, everybody. So we are ready to get started here. Let me maximize the right windows so we can start our session. Fantastic. Good to see you all. I'm just looking at the comments box over there, and everything is looking good. Very good. Perfect. Okay, so hey, I want to say a quick hello as well. So I'm trying to turn on my webcam here just to say hello. I'm not sure if you see me. It seems that it's not working. Okay, so maybe we'll leave it for another day. I just wanted to say hi because it's always kind of like the voice in the background, but you don't always see me. So I just wanted to say hello. Let me try one more time, and we'll start immediately. Okay, and the session is not about you guys see me. The session is about trading. So, but anyway, let me see if it works this time. For whatever reason, it's not turning on my camera. Okay, so no problem. I'll remove it and we'll do it another day, guys. Okay, let's pretend you saw me and I say hi and I'm waving my hand at you. Anyway, a pleasure to be here. Hello from Singapore, Maud. How are you? Hello, everybody. Royce, Dihide, Dirk, Altong, Diana, Chuntan, Orlando, John Hammer, and Tony. Everybody, guys. Bojan. Fantastic. Let's begin the day. So today is May 9, 2019. My name is Jose Blasco. I'll be your guide in today's session. Today is about longer term trading. So we'll be focusing especially on the options world or the options markets. And we'll be planning on directional and non-directional and also neutral trades. So disclaimer before we begin. The following videos, clips, and demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Good, so we have it. Disclaimer, introduction for the session. We have everything we needed to begin. We are only missing either TradeStation, so we have it ready here. We will at times also use TradingView, since in the group we are a mix of traders, in the sense that some of you guys may be using TradingView, some of you guys may be using TradeStation. So I'll be at times using either one platform or the other, and please feel free to ask questions when it comes to both platforms, even though I would guess that most of the time will be spent with TradeStation like it normally happens. Okay, and I will certainly start with TradeStation because in this process of looking for trades for longer term, as you know, as you have seen before, we love to use the scan, and the scan is a tool built in TradeStation. Okay, I have it set up here in my workspace, and we are dealing with 5 different scans: 2 scans for directional trades, 2 scans for neutral trades, and 1 scan for non-directional. Okay, so we are dealing with 5 types of scans. Okay, so I'm gonna be moving efficiently today, if that's okay, unless you guys stop me. Okay, I'm gonna be moving efficiently when it comes to my pace of teaching, since if I'm not mistaken, last week I had a whole explanation. I re-summarized what is directional, what is neutral, what is non-directional. So I believe that probably it's fresh in everybody's mind, and therefore this would allow me to start moving into the trades efficiently. Okay, guys, so let's begin with directionally long, where we can see we have a collection of trades that could be good candidates for us to go long and make profits out of moves to the upside. Okay, there are many stocks that have been falling hard in the past, let's say 2 days, and this is bringing many stocks nearer to green UFOs. Ali has been falling down, but not that much. Okay, so let's take a look at Comcast. Comcast seems to be a little closer to the UFOs, but not that much. What about CY? And by the way, I'm using the daily time frame as we speak. CY is a little bit in the middle of nowhere. What about Dish? Dish is falling down from a red UFO, so the red is too close. First Solar, a little bit in the middle of nowhere. What about Google? Google is closer to the green UFO, so that out of what we just seen seems to be probably one of the best candidates for us to start planning on a trade. IVZ Invesco is in a very good location actually. The only problem that we have with IVZ, not necessarily a problem, but a little bit of a disadvantage, is the fact that that stock is a $21 stock, and if your account is large, to be able to profit properly, you may need to use many options contracts, and therefore you may suffer a little slippage, okay? But it's looking good in the sense that you got a green UFO, another green UFO below, and the next red UFO is like $2.50 away, which is nice room for movement in that $20 stock, okay? So we'll come back to this one. PayPal. So notice that what I'm doing in this process, I'm just going over the process as I always do, and sharing a little bit of what I'm thinking behind the scenes. So that way, the days that we don't get together, you can plan the trades yourself. Okay, so you understand. So what I'm doing is I'm going through all the symbols after doing the scanning. Actually, I'm just realizing I haven't said it, but I run the scans before starting the session. So what I'm doing now is I got the results. I'm going through the results to see which are the markets that are closer to green and further away from red. That's what I'm looking for. So that way I find opportunities with a greater potential for movement. Okay, so PayPal was kind of in the middle of nowhere a little bit. Twitter a little bit in the middle of nowhere, and XLF, the financial ETF, not too bad, but not as good as Invesco or Google. Okay, Google getting closer to the green, Invesco in the green, okay, with another UFO below. So those two stocks out of what I just seen at the speed of the light will be the two stocks that catch my attention the most. And funnily enough, one is very cheap and the other one is quite pricey. Okay, meaning that if you do the trade with Invesco, you may end up using a bunch of contracts because it's a cheap stock. So to have a nice profit, you may need to use multiple contracts. If you do the trade with Google, this is a $1,000+ stock per share. Therefore, you may not be able to take this trade. It may be too much risk, or maybe you do the trade with one or two contracts only. Okay, so again, this is what the market is bringing us today. Okay, so again, good news about Google. Okay, even if I was to look at the weekly time frame, right, or even the monthly time frame. So what's the good news? Google just made all-time high and started falling, but that stock, it's identified in thanks to our scanner, it's identified as a stock in an uptrend, and therefore there is a lot of potential for this to continue going higher, especially if the broad market turns higher. Good news as well, by the way, the market is opening down. It's going to up and down. In the pre-market is already trading almost 1% down, 0.82% down negative, which will allow you to have a cheaper trade. Okay, so that's a good one for us to plan a trade on Google. Okay, so what I would like to do to understand better the Google trade is to go ahead and load the 60-minute time frame. I would like to see with more precision as well what is available in this time frame. So we have the PD symbol on the upper left. That means pending data. Okay, so I'm just gonna wait until all the information is downloaded. Yep, that's it, we have it. So, okay, no, not yet, still pending data, still PD, so the algo has not been fully processed yet. So we're just waiting for the download. Yeah, I'm just looking at the comments box as well, everything looks good. Perfect, okay, we have it. So notice how on the 60-minute time frame, we got a 48% with regular session data. If I look at pre and post market, with Google we got 55%. So actually, I would say that the most relevant orders for Google are located in the pre and post market data. And notice that we don't have anything green until 1084, okay, which is the inner circle. The top of the box is 1087, more or less. If I go back to the pre and post to the regular session, we got 48% instead of 74, and really we do have something starting at this level, which is 1149. Okay, but to be honest, I'm not liking it. I'm not liking it because if I happen to be wrong on those UFOs above, I'm gonna have to wait for the market to fall by 5.3% extra for me to finally have a bounce back to the upside. And on top of that, if the market falls that low, the whole conditions that the scanner identified as this being a strong stock in a strong uptrend may not be real anymore. So I'm not liking it. Okay, I am not liking it for us to execute a trade. And my proposal to you guys would be to go back to Google tomorrow, look at the pre-market data in the 60-minute time frame, pre and post market, and see if new green UFOs have formed in the pre or post market data, which is not available now. Okay, again, let me show you very quick so the instruction is clear. If you look at regular session now, sorry, not regular session, pre and post market, and the reason why with Google look at pre and post market is because the stats are greater. Instead of 48 is 55, okay? And you know, notice how I got no green UFO until 1084. So if, let's say tomorrow you look at Google, okay, same as today, and tomorrow Google looks, let me draw it again, okay, tomorrow Google looks like there is something like that on the chart, some UFO, right, and price moved up or something like that, and now you have a green UFO. I mean, I know that my UFO here is blue, but let's pretend for a minute it's green, right? So you have a new green UFO tomorrow on the chart, then yes, tomorrow maybe you have an opportunity to plan the trade. But today, you know, we may need to see Google drop to 1084 before we see a proper bounce, you know, and that's a little too much, okay? So anyway, so let's go check on Invesco. Since Invesco got 2 daily green UFOs nearby, Invesco is going to open 0.28% down. So this is telling you that basically that stock is going to open inside the green UFO. So we may have a take to trade right at the open, so be ready. I'm going to look at the 60-minute time frame to see what we have. So like earlier, I'm loading a new chart that is not in the cache folder, and therefore PD stands for pending data. TradeStation is downloading it. So that's when we use a little patience. We just wait. Okay, everybody very silent today. Everybody very silent. So what do we have? Well, in the regular session hours, we got 55% performance, UFO performance stats. If we look at pre and post market, we got 48. So notice how Invesco is traded more heavily during regular market hours instead of traded overnight. Okay, so I'm gonna ignore that. And therefore, I can see I have a green UFO relatively close to price, which is 2085. I want to have a line here out of going back to my daily time frame and understanding if that one is overlapping or not the daily time frame, and it is. Okay, actually it's quite nice. The inner circle inside the UFO, which is the place where we are likely to have the greatest concentration of orders, happens to be right where the blue line is. Okay, the inner circle with together with the blue line, which is a nice confirmation that in 2 different time frames you have great concentration of orders at this point. And notice how in a prior case, IVZ tried, let me try to draw my arrow again. IVZ tried to get as low, but it was not able to get as low. Okay, it went close, but was not able to hit, that blue line. Okay, so now since that that particular UFO has been already, let's call it kissed, and then price moved. Notice how none of the UFOs are of dark color, but I'm not too concerned about it because I've seen in the 60-minute time frame a collection of green UFOs upon each other, and on top of that, on the daily time frame, I also have multiple UFOs on top of each other. So the only reason for this trend to fail and not to continue going higher is that something significant happens to either the broad markets or that stock from a fundamental point of view of something like that, and next thing you know, the world wants to share their shares and everybody is unloading everything. That trade to me looks quite high probability given the fact that we have a healthy trend and we have multiple UFOs that are a green color in multiple time frames, 60 and daily, lining up on top of each other, that will produce some movement to the upside at some point. It's looking quite likely. Okay, so I'm gonna plan on a trade. It's 9:15 a.m. Central Eastern Time, New York time. So I'm just opening Option Station Pro here, and the reason why I was looking at the time is because I'm sure you have heard me say before that 10 to 20 minutes before the market opens, typically brokers will reset the option chain. So I'm not sure I'm gonna have market data now. So if I don't have market data in the option chain, what I'll do is I'll come back to IVZ later on and plan the trade later on if my option chain is now zeroed out, okay, because of the reset process that happens before the market opens. Okay, so we may have to take a look at later. So IVZ, using a little British English here, maybe I could say IVZ as well now with American English. So what do we have here? So let me open any of those. Yes, we still have market data. Notice how nothing is zero yet. Okay, so maybe we have time to plan the trade in the following next 5 minutes. Okay, so let's go ahead and try to do this. Okay, so we're gonna do a bull call spread. Okay, because we are bullish. Remember, we are directional. So to do a bull call spread, we will end up selling a call beyond where our target is. We will buy a call somewhere in between the entry and the final target. Okay, and to be able to do this properly, we will also need to look into the expiration date and the earnings report of that stock. Okay, so I need to look at the expiration date that we're gonna use, but also I need to double check the earnings, okay, because that's one of the rules for us when deciding on the expiration date to be used. Okay, so I'm just gonna leave this on the screen, go back to my web browser, open a new window and type briefing.com, and in this window I am just going to be inputting the symbol of IVZ Invesco. So let's take a look at what happens. Next earnings happening on July 25. This is pretty far away, so not a problem to take this trade. Looking at the chain, we got July 19, October 18. So that July 25, it's kind of lining up with that date. So initially that would be the date that we're gonna use. But remember, before I get so happy, we need to calculate the TTT and make sure that 71 is greater than the TTT calculation, okay? So again, TTT standing for time to target. We're gonna calculate TTT by bringing a calculator into the main screen and looking at what's the current price and what's the target price. So the target price would be 23.18. If I look at the current price, and since the market hasn't opened, I'm not gonna look at 21.25. I'm gonna look at 20.99 because it looks like that stock is gonna open down. Okay, so we're gonna go ahead and subtract 20.99. So we get to measure the room for movement, which is $2.19. And now I'm gonna look at what is the daily ATR for that particular stock, which is 49 cents per day. Okay, so I'm gonna take 2.19 divided by 0.4936, okay? And this is gonna tell you 4.43. Now 4.43 what? 4.43 weeks. That's what this means. And every week is made of 7 days. So times 7, that's gonna be 31 days. It's the time to target calculation result. So we are anticipating that this trade will last around 30 days. So we want an expiration date to be more than 31, and we are gonna validate and approve the use of the 19th of July 2019, because that provides more than 31, and on top of that is an expiration date close to the earnings report, in the sense that the value of those options will grow as the earnings report approaches, and this will offset a little bit the time decay component. Okay, so we're gonna be using 19 July 2019. We know the expiration date is July 25, okay? So we know that data, and now what we need to do is to identify which strikes do we want to use, and they just zeroed out our option chain, which I was kind of expecting this to happen 10 minutes before the open, okay? So I'll come back to IVZ in a minute, okay? What we know for now is that we're gonna be using 19th of July because the earnings report is July 25, and the TTT calculation has given us as a result 31 days, okay? So we're gonna be happy with July 19 because that's 71 days, okay? And the only thing I need to know now is which call am I gonna buy? Am I gonna buy the 22 call? Am I gonna sell the 24 call? So which calls am I gonna buy and sell? But I'll be able to do that after the market opens, okay? And be ready, guys. Be ready, because if the market opens down by 141%, we're gonna be executing this trade right at the open, okay? So I'll come back in 10 minutes. In the meantime, we are now moving into directional shorts, okay? So directional shorts is the same concept, but now we are looking at markets ideally closer to the red and further away from the green, which that stock AZN, I have never traded that stock before, by the way. AstraZeneca, never traded that stock before, but that stock is a little bit in the middle of nowhere. Biogen, let me see. That stock, well, yeah, is in a very, very strong downtrend, but so far away from the red. So I would not recommend to do anything with Biogen. NWL. Okay, when I said not recommend to do anything with Biogen, I meant today. Okay, because in other cases it may be a good idea. So NWL looks good to plan on a trade, in the sense that we are very close to the red. There is nothing green anywhere close, so there may be room for the stock to keep falling, but this is a $15 per share stock, and again, that would only work well, I am guessing here, if your account was to be limited in size. So I'll come back to this if Tesla is not really looking good. So let's take a look at Tesla, because Tesla may be a better bet, but unfortunately not. Tesla is dropping 1.07%, 1.16% before the market opens, so it's gonna open gapping down somewhere here. In other words, it's a little bit in the middle of nowhere, even though tomorrow you may have a red UFO here. Okay, so if Tesla opens gapping down and keeps going down during the rest of the day, I'm telling you, you're gonna have a red UFO here tomorrow. So maybe you can do that on your own, okay? And you're gonna be in this beautiful, trend that may continue going down. You have room to go all the way to that UFO, okay? So you may have an opportunity, okay? But again, not at the moment, okay? Not at the moment. So the only bet for short-term trading, the only bet for shorting, that's what I meant, is NWL. So I'm gonna load the 60-minute time frame to see what we have. I need to look at two different time frames here. So first I want to look at the 60-minute time frame, and while this is loading, PD loading, I'm gonna switch to the weekly as well, because remember, on the daily time frame I didn't see any green UFO. So I want to see on the weekly time frame where is my next UFO. And notice how the next UFO happens to be located around 12.49. Okay, 12.49, that's where the next UFO is. Okay, what about the monthly? Sometimes larger time frames will have nearer UFOs. No, that one is located all the way to $6. Okay, so that company is in pretty terrible pain, as you can see, and it seems that there is nothing much to stop it until we get to 12.49. So again, it could be a good idea to plan on a short. We have two red UFOs on top of each other. The only thing here is that notice how that stock is opening down by 0.77%. So that stock is going to open down here at, like 1541. Okay, so, since so much has failed already, right? And the real good entry price is here, right? So, I would recommend, also because the price of the stock is so low, so I would recommend that if the stock opens gapping down, that you wait for that stock to come back to the UFO and then you take the trade expecting the drop to happen, okay? Could you take the trade right at the open? Yes. And you've seen me do that before, but at the same time, in this case, given the fact that the stock is quite cheap and there's been a lot of drop already, I would personally prefer to wait for a little bit of a pullback to the upside and then enter the trade to the short side, okay? You may miss the trade if you do that, but at the same time, I'm not too keen when the price of the stock is too low to keep shorting with such a low price, okay? So we got 4 minutes for the open, so I'll come back to NWL later and we'll finish planning the trade, because again, I need to look into the options and I cannot look into the options now. So the only thing I can tell you is that we're gonna do something similar to what we did before. We're gonna be buying, okay? We're gonna be buying some put, okay? And much lower, we're gonna be selling, selling some put, okay? And we're gonna be doing that with an expiration date that we need to identify. We need to look as well into the earnings as we did earlier too, and we will also have to do the TTT calculation, okay? So I will do all of this after the market opens, so that way I don't drive you crazy. I can just do the calculation and basically confirm to you at that time if we're gonna take the trade or not. Also, the other thing I'm thinking in the back of my mind is that NWL is not a very liquid stock. So if I was to look at the option chain and I was to see too big as a spread between the bid and the ask price of the options, I would simply ignore the opportunity. And even though from a charting point of view, from a directional move point of view is valid, from a trading point of view, I don't want to expose myself to be hurt on slippage, which is the difference between the bid and the ask price. Good, guys, I've been talking non-stop for 30 minutes. How is it going so far? Everybody with me? Where the session is about to become a little more fun, right? The market is about to open. So I'm gonna go back to IVZ, plan the trade and execute, and immediately we'll move into the world of credit option strategies, doing the neutral longs, the neutral shorts, and the non-directional as well. So that's why I meant that the session is about to become more fun, okay? So far, so good, very good, all good. Fantastic, guys. I appreciate your feedback very much, guys, because I find myself talking to the microphone and it's always a question mark on my side. Is everybody with me? Am I going too fast? Even though I am aware that today I am speaking a little faster than normal, in the sense that I would like to find at least one trade per group, okay? And I'm shooting for that and execute them. That's my goal. So 9:28, okay? So we are 2 minutes away from the open. Good. So Orlando, yes, Jose, great review on following the way you work and think the trade. Perfect, thanks. That was my intention, so that makes me very happy. So anyway, earnings on August 2nd. Thank you so much. This will save me a little bit of time later on. I appreciate this. Again, I love it. Teamwork, as I always say. So what do we have with neutral long? Okay, so with neutral long, we have a collection of trades here as well that we're gonna be looking into in just a minute. With neutral short, I also have a bunch of potential trades for us to execute, and also for non-directional, okay? So notice how, as the markets fall, quick observation here. So notice this is the S&P, right? And the S&P has been falling in the past days. Today, the S&P is gonna open again one more time, 0.85% down. Lovely moves, okay? So when you look at the VIX, okay, which is the average implied volatility for the options that belong to the 500 greatest stocks in America. So what's happening? Well, the implied volatility has been going up, a lot, going from this bottom part, which is 13, to a current value of 22. It's almost double the value. Think about it percentage-wise. This is not a joke, okay? Now, again, when the VIX gets to this point, options are about to get cheap, which also another way to say that is that, the bottom part is, source of fear, where the top part is source of calm. Okay, so when the VIX gets to those 25 plus levels, okay, everybody's gonna start getting much calmer. Okay, so in other words, the market may turn around and continue going higher. Okay, so even though the market just opened and is gapping down 0.87 down, and I'm sure if you turn on the TV, everybody it's basically saying the world is ending. Well, from a directional point of view, okay, we're gonna welcome the trade with IVZ, finish planning it, take advantage as well of the fact that the prices of the options got much more expensive, okay, and enter the trade. Okay, so notice how IVZ open below the green UFO. Okay, so that UFO is gone, even though it's still on the chart, because it updates once per candle. So once the market closes today, because we are looking at a daily time frame, right? So that UFO will be automatically erased from your chart once per candle. But again, based on what we said before, we are not concerned. We are not concerned because we had more green UFOs in the 60 and also a UFO on the daily. Okay, so could I be wrong on the trade and the whole broad market goes down, IVZ goes down? Yes. And the beauty of doing a bull call spread is that whatever I pay for the bull call spread is the most I can lose. And therefore, even if I was to end up wrong in the trade, my pain, my loss will be limited to what I pay for the bull call spread. Okay, so I'm very happy to plan this trade with IVZ. I will be happier as well that my computer screen updates. Okay, that would be even better. So let me reset Option Station Pro. So I'm just gonna reopen Option Station Pro, and we're gonna be able to see the option chain, and we'll be able to look at the spread and everything. Okay, so IVZ is not the most liquid stock in the world. Okay, it's not, but it should be okay. It should be okay. Looking at July 71, it should actually is not okay at all. Not in okay. Wow, this is strange because I have traded that stock before, and this level of spread I haven't seen it before. Yeah, so guys, even though we spent some time talking about it, look, real-time trading, my friends, real-time situations that we find as traders sometimes. I don't know what is happening with that particular stock, but it seems that the quantity of options trades that are taking place is less than before, because notice how the spreads are not good. Okay, now, even though I know that stock because I have traded it before, and I am surprised about this level of spread. What I don't remember is if I had traded that stock right at the open or later on. And sometimes what happens to stocks that are not so liquid is that a little later in the day, like 10 minutes later, something like that, then the spreads narrow, and then it's okay for you to take the trade. Which is one of the reasons why sometimes I recommend you when you do debit trades or credit trades where you have spreads, only for spreads, okay, never for naked options. But when you do spreads, sometimes I do recommend you to not to use stops, because the most you pay for the spread is the most you can lose. Because if you were to use a stop and the stop triggers right at the open and you get to suffer all that spread, it's a really problematic situation. Okay, so I'm gonna come back to IVF and look at those spreads later in the day, because I have a little bit of a contradiction here, a little conflict, which is, in one hand I see thousands of contracts traded. In the other hand, I have traded that stock before and I didn't see such wide spreads. But on today's hand, spreads are too wide. And therefore, I have a little conflict. So I will come back later to see what's going on. Okay? So what am I going to do? I'm going to go back to NWL. That one, Devan, ETFs are best for options in the sense of liquidity. Yes, 100%. In terms of price movement, I would go as far as saying that ETFs sometimes will give you the feel, especially if you trade intraday, they will give you the feel of being very slow moving markets, okay? Because again, they are very safe. So for wealth management, for long-term trades and so on, it's actually nice. But for those, kind of like 30-day trade, 20-day trade, personally, I prefer to use stocks because the price movement is faster, and when you're wrong sooner, and when you're right, you get to your targets faster as well. So I like that. Is that making sense? But again, you have a point, and I agree. From a liquidity point of view, normally you would be in a better position. Okay, so let's take a look at, let me restart Option Station Pro. I want to look at NWL. Yeah, Orlando, so the rule of thumb for spread, it's a tough one to define in words, okay? Of course, we can put rules around everything, and we should, by the way. But at the same time, in this case, I want to do a little bit of a, let's call it an exception, okay? And it's because, the reason why I'm mentioning this is because sometimes you will find stocks that have a very wide spread, but when you trade them, the market makers that give you the fills are very, very eager to add volume to those stocks, and therefore maybe you go for the midpoint of the spread and you get filled easily. Where other stocks that are more liquid, maybe you go for a third of the spread and it takes ages for you to get filled, right? So sometimes you see a wide spread, but it doesn't really concern you unless it's really wide. Earlier it was really wide, okay? And then it concerns you. But in other cases, I would say that the rule of thumb is more coming from experience. If you see a spread that is too wide, but you take the trade and you get filled very easily at the midpoint, then you know what? The spread was not that wide, even though it showed wide in the screen. Is that making sense? And how do you know you're going to get filled easily? Well, it comes through the experience because you have placed orders before, by the way, real orders, not simulated, and you had seen yourself filled easily. Okay, so that's how you know. So yeah, sometimes, I wish I could end up with a black or white rule for everything, which is, believe me, my intention all the time. But in this case, I need to point at experience. Okay, so what do we have with NWL? We talked about the earnings to be on August 2nd, isn't it? Dirk was showing this to us before, August 5 on my one. So if I was to look at dates that are on August, which in this case is gonna be September, so you will see the spread here it's around 10 cents, 15 cents, 20 cents. So again, I would say it's acceptable, even though I would be demanding shaving the spread when executing those trades, okay? So let's plan the trade with NWL. Okay, let's plan the trade. And you remember, you have two options. Enter the trade now. So the trade I'm about to plan, you can enter it now at current price. Okay, or a better choice would be to wait for NWL to come back to the UFO, and at that time you enter the trade. Okay, and then expecting the market to fall out of the UFO. Okay, so I'm gonna plan the trade, and the timing of the trade, when to get in, when to get out, you will decide that based on your own rules. Okay, so what did we say? We said the earnings report are gonna be August 5. We're gonna use September 2019 as the expiration date. Okay, the TTT, let me bring the calculator. So we set the target earlier, we said was going to be 1249. Hopefully you remember that when I looked at the weekly time frame, remember? The current entry price, okay, but also in case you're gonna use the upper UFO, that would be 1581. You guys see that? So we are talking about $3.3 of move out of a stock that uses an ATR of 63 cents per day. We are talking about 5 weeks to get there. Now 5 weeks times 7, that is 36 days. And certainly, if we use September, that carries 134 days to expiration, you got plenty of time, okay? And you will benefit from the earnings report increasing the price of the options a little bit, okay? So we're gonna be doing September, okay, expiration that is validated now, and the plan for the trade would be to sell a put, which in this case would be the 12, and to buy a put, which I need to look into which one. Now, let me do this. Do I have the 12? Yes, I have the 12 put, it's right here. Okay, I'm gonna right click, analyze to buy a vertical. We are building a bear put spread, that is a type of a vertical. Orlando, I would say that anything above 20% of the spread, any spread which is 20% the value of the option price, that would be crazy. So if the option is, let's say the option is $2, so 20% is 40 cents. So if your spread is more than 40 cents and you take it, that's really, really extreme, okay? Good, so what do we do? So we are selling the 12 put, okay? And coming back to the chart, we have, oh, I just closed the calculator, sorry for that. So I'm gonna have to reopen the calculator. We have the current price being 1581 and the target 1249. So the midpoint is 14, okay, 14. So the idea would be to use the 14 and sell the 12, okay? Now, this sometimes works, sometimes doesn't. Let me explain what I mean. If I buy the 14 put and I sell the 12 put, okay, so notice buy, sell, so buy the 14, sell the 12, right? So if you do that, you end up with a delta of 13, okay? One of the rules we said is that you want a delta of at least 30. So I'm just gonna go extreme and move this to 9. If I move to 9, I get 26. And this is the lowest option available, okay? And it didn't get to 30, okay? What's the problem? The problem is my first strike. So based on the calculator, I should buy the 14, but because I don't get delta of 30, I'm gonna move it up to 15 to get my delta to be 30, okay? So this may allow me to go for 10, this may allow me to go for 11, no. So I'm gonna have to do 15 and 10 to get my 30 delta, okay? And if I do this trade now, okay, if I do this trade now, you would be paying $130 for the trade, right? If you were to wait for that stock to rally to 1591 before you buy the 15 put and sell the 11 put, okay, if you were to wait for that stock to rally, and once it gets to 1581, you buy the bear put spread expecting the stock to drop, okay? So if you were to wait that extra time, so 1581, let me input 1581 here. So 1581, so if you were to do that, you would expect the value of that spread to become 114 instead of 130, okay? And the reason why I'm pointing at this is because you guys need to know what is the risk of the trade. And the risk of the trade, if you take it now per contract, is $130. So if you buy the bear put spread and the market goes against you and time passes all the way to September and it never came back to you, never reach your target, you would lose $130 because the options would expire worthless, okay? If you waited for that stock to rally a little bit, enter the red UFO, and you purchase the bear put spread, then it would not cost you 130, it would cost you 115, right? So if you were not to use stops and you were to let this thing to do its thing, and NWL went up instead of down, and in September the option expires, then you would have lost 115. So what's the risk of the trade? 130 or 115, depending on your entry, okay? That's the risk of the trade. And assuming that you don't plan to use stops, okay? Which again, even though you don't plan to use stops, it's kind of like the stop is built in, isn't it? Because no matter what happens, the most you can lose is 130. Okay. Now let's say you tell me, oh, wait a minute, I'm willing to risk 300. Okay, so buy two contracts. So you take the trade instead of one, you make it two. Buy two puts, sell two puts, and now your risk is 260. Does that make sense? So this is the trade. Okay, this is the trade, and out of practice, okay, and for myself, and please don't do exactly the same thing I'm about to do. Okay, I'm gonna buy that spread with a market order. Okay, I told you it would be recommended. Okay, it would be recommended to use an activation rule where you input an NWL and you would only buy if NWL reaches 1581. Okay, so if you were to do something like that, that's good, because your order will not get filled unless that stock condition is met. Okay, what I'm gonna do out of practice, so you get to see it, is I'm gonna buy, and I'm gonna buy with a market order. Okay, and this is because I'm using a simulated account with TradeStation, and with the simulated accounts, with TradeStation specifically, other brokers are different. You need to use market orders when you practice options trading. So I'm gonna do it with a market order because of that reason. Okay, so, but before I do it, I'm gonna click no. What you will want to do yourself, okay, it's come here for the midpoint and don't leave it as natural 145. Make sure you make it 130. Okay, so you get filled at the midpoint. And again, that stock is not super liquid, but many times you will find stocks that show a little bit of spread. Okay, you will find those stocks to actually allow you to get filled quite easily, easier than what you would expect at the midpoint. And it's because market makers are very eager to give you those fills. Okay, so anyway, we have a trade with NWL. I'm just gonna have a line here out of future consultation purposes if that was to be needed. I'm just gonna minimize that particular chart and just leave it somewhere in the background of my workspace and go for the next trade. Good, so now we are entering the world of credit spreads. Okay, we are entering the world of credit spreads, and I would like to move all the way directly to non-directional trades. And we have a collection of stocks in front of us. Now, many times those stocks, remember in the scanner is looking for stocks with a very high price for the options. And many times there are reasons for that. Okay, and the reasons is because earnings is very close. So for example, Alibaba is a stock that I love to trade because of the amount of premium built in. But careful, because notice how the next earnings are happening on May 15. Okay, next Friday is May 10. Tomorrow is May 10, but the next Friday is May 17. So if I wanted to take a trade with Baba, the only way for me to be able to do it without putting myself at extra risk because of the earnings report would be to use May 10 expiration. Okay, that would be the only way. And that many times will not work because it's only 1 day and a half before expiration. But at the same time, especially in a day like today, where the market is falling like the world is ending, and actually many people out there in the world believe the world is ending, and on top of that, that stock is $100+ stock, which means that normally there is some value in the options because the stock has some value. Sometimes we do find trades where even though it's options, you hold the trade for a couple of days and you're done, and those trades are very beautiful. So that's why I'm kind of skipping the neutral ones and moving directly into the non-directional, knowing what's going on in the market. That stock is falling 3% today. So believe me, many people in the world believe the world is ending, and they are convinced the world is ending. Okay, and it may be, but if it's not, Friday options will expire, and if you have sold them, then you would have made a profit. Okay, so let's bet on the world not ending. Is that making sense? And let's quantify our risk and plan the trade accordingly. So I'm loading the chart here with the 60 minutes first. Pending data, almost there. Dirk, you got filled at 130. Very good. You see, that's amazing, right? We saw that major spread, and you know what? You place your order, you get filled. So that, Orlando, going back to you, that's exactly what I meant. Now, I'm sure for the rest of his life, Dirk will remember that, that day I traded NWL and it didn't look too good, but you know what? It's better than what it looks, right? It's many times market makers get us see things the way they want us to see them, which is not necessarily exactly the way they are, okay? So anyway, 48% is the probability I get with the UFO performance stats on the 60-minute time frame. If I look at pre and post-market data, notice how Alibaba got much more quality of unfilled orders if you look at pre and post market data. You have seen that this doesn't happen all the time the same way for all stocks. But in the case of Alibaba, that's the way it is. Okay, so for this trade, I am going to rely exclusively on the pre and post market data. And what I would like to do, okay, out of my visual understanding of what I have in front of me, is I would like to draw a couple of lines above 2 red UFOs and below 2 green UFOs, and basically state that from now until tomorrow, even though that stock may fall like a rock, or even though that stock may rally like a rocket to the moon, okay, what I would say is that it's not too likely, not so likely for the stock to surpass those 2 UFOs above or surpass those two UFOs below. In other words, that stock is likely to remain somewhere in this range from now until tomorrow. Okay, that's what I'm saying. And then maybe it will break out or whatever, but not before tomorrow. And the reason why is just because of distance. 179 is pretty far from 173. 165 is pretty far from 173. But on top of that, most importantly, because I got UFOs. Okay. Now, before I get too happy with this, which I am actually quite happy, but let's look at regular session as well, because if there was another little extra UFO there, I want to make sure I don't leave that out of the equation. So for example, notice how my blue line happens to be below that UFO. You know what? I'd rather have it above that UFO. That would be much better. Okay. So that's what I have. Okay. This is what I have in front of me. And I'm going to plan a trade betting on Alibaba staying within those zones. Now, I gave you all that explanation. Remember, I can only do this if I was to use a May 10 expiration date. Okay, because the earnings are on the 15th, so I cannot use May 17. I need to use May 10. Okay, but the first thing I need to do before I do much more with the charts, okay, would be to look at the. Okay, great. So I'm gonna have to close and reopen Option Station Pro, so I can make sure I have loaded BABA. Okay, so I need to look at the option chain, and the reason why is because I want to know how much I'm gonna get paid if I sell the 180 or the 165. Okay, because realistically it's quite far, and realistically tomorrow is very close. So I may not get paid enough. Okay, so instead of putting too much time on the analysis, now that I know 180, 165, before I do anything else, I'm just gonna go ahead and look at the option chain, which for whatever reason is not loading. Maybe I didn't click properly. Okay, now it's loading. Cool. So let me see your questions. Orlando, how do you arrive to the conclusion that pre-market data is better quality than regular trading hours? Because the stats are greater, which means the on-field orders tend to be canceled less often, right? So notice that I used both pieces of information to plan the trade. I did respect both charts, but I got better values with pre-market data. In the case of BABA, other stocks will be different, because who controls stocks? The big players. Stocks are very fragile. Who control them? The big players. So by looking at the stats pre and post market or regular trading hours, you get to see a little bit into what the big players do. Okay, the big players that trade that stock. Okay, so guys, my friends, I believe that we have a trade here. Okay, so we have the earnings are on what did I say? On the 15th, so May 15th. We're gonna be using expiration date of May 10, so we don't run into earnings happening in the middle of the life of the trade. We're going to be planning on doing an Iron Condor, which is nothing more, nothing else than a bear call spread combined with a bull put spread. In other words, you buy a call and sell a call above the blue line, and you sell a put and you buy a put below the blue line. Okay, and which ones? Well, in a perfect world, you would want 165 and 164, which doesn't exist. I'm just writing the perfect world first, and then we'll see what's possible. And then in the perfect world, you will want 181 and 182, which again doesn't exist either. Okay, as you will see in a minute in the option chain. But I'm just starting by typing, what would be considered as the perfect world, and then we adjust to the real world. So let's take a look. So what do we have? Well, we would want the 165, but what do we have available in May 10? We got 165, we have it. So the 155 is available, but the next one has to be 162.5. Okay, so it has to be 162.5. So that side is fine. What about the upper side? You want the 181, but it doesn't exist. Okay, so we're gonna have to use the 182.5 and then the 185. Okay, so 182.5 and 185. That's what we're gonna have to use, and this is gonna make our trade to be slightly imbalanced. Okay, but anyway, let's go ahead and do some further analysis here because it's actually looking quite good. I'm not fully sure yet that we have a confirmed trade, but I will know very quickly. So I am inserting an iron condor here. On the put side, remember we said I was going to use 162.5 and 165. And on the call side, we said I was going to use the 185 and the 182.5. So I'm just changing those values accordingly, okay? And I'm gonna add as well a couple of extra strikes here. So I want on the top, I want, what was the value? 180.9. Okay, this is the value where that market is not likely to go. Okay, oh, I have an extra. Okay, let me start again. 180.9. Okay, almost there. Okay, that should be fine now. Good, and then here in the middle, I'm gonna go for the last. Okay, and the bottom part, I'm gonna have another red dot. Red in this case, it's bad news. Okay, red above is bad news, red below is bad news, and the below was 165.18. So 165.18. Okay, 165.18. Okay, interesting. 18. Okay, well, it doesn't take the 18, it's fine. 165.10, that's good enough, okay? And what do we have? Okay, well, we have a little bit of an imbalance. This is what I was expecting, okay? And we're gonna fix it. You'll see it should be easy to fix. But at the same time, the little bit of an imbalance that we have is that notice how in the bottom part, it shows us we're gonna lose 52, where on the top part it shows us we're going to lose 49. Okay, so we are losing a little more below, a little less above. Normally, you would want the opposite. Okay, normally you would want a little bit more pain on the top, a little bit less pain on the bottom, because when the market go up, options normally lose value. So by losing value just because the market went up, that removes a little pain. So you want to start with more pain above, because if the market goes above, then some pain will be removed. Okay, so this is not ideal, and by the way, it's not going to be very easy to adjust because this stock only have strike price increments of $2.5 at a time, so it's not going to be super easy to adjust. But let's try. If I do 160 and 162.5, now I got 37 below and 54 above. Okay, and this makes sense to me. I would prefer this to be like 40, 50, but of course I cannot. So if I have to choose, this would be my choice. Okay, and in order for me to validate this trade, okay, and confirm if this trade is a trade to be taken or not, I'm gonna have to apply my options rules. So my options rules say that when doing credit spreads or iron condors, you want the credit to be at least 15% of the difference between strikes. Okay, so you pick the greatest difference between strikes. Okay, which is 185, 182, or 160, 162.5. In both cases, the difference between strikes, it's $2.5. Okay, and you want the credit collected to be at least 15% of that, which is 37.5. Okay, and if you were to do this trade at a midpoint, you get 50. Okay, which 52 now, it's more than 37.5. Okay, so it works. Okay, so the trade is valid. The trade is a trade that you could certainly go ahead and execute, and as long as that market remains between this pretty wide range, you would be fine. Okay, tomorrow the options will expire, and the money collected, which is $50 per contract, would be kept as yours. Now, careful, before we get too excited, we need to talk about the risk, because the risk will tell you how many contracts to use. Hey Pedro, a pleasure. How many contracts, right? Well, remember, the risk of the trade is the difference between strikes, 2.5, minus the credit collected, let's say it's 0.5. So you basically have $200 of risk per contract. So let's say you sell one condor with one contract, you have $200 of risk. Let's say you sell two condors, you have $400 of risk. Let's say you do three, you have $600 of risk, okay? And every time you do it, you'll get paid 50. So if you were to do, let's say, 3 contracts, tomorrow, when the market closes, you would have collected $150 of profit in this trade, okay? Again, pretty nice, because the probability of profitability is very, very high, in the sense that the range is very wide and tomorrow is very close. So the probability of profitability, it's really quite high, but there is a price to pay for this, which is the amount of money you will make is limited to 50 per contract. If instead of using May 10, you use May 17, then you will get so much more, right? But now you're exposed to earnings, which is a gamble, okay? So we don't do that. You don't do May 17, and now you get 123, and now you are gambling. What we do is we are doing May 10, you get 50, and there is no gambling, and now you have a high probability trade, okay? This is not a trade where you will become multimillionaire, but this is a likely profit that I am going to execute in my trade. And if you like it, as you know, you are welcome to mimic me. You decide if you want to use real money, paper money, you decide how many contracts, all of this is your decision, but I'm just getting in. I'm doing market again because in a simulated account.
Order filled.
So order filled. I'm using market because it's a simulated account, but in your case, as you know, make sure you execute with a limit order and go for that 50. Don't go for less than 50, guys, okay? And if you get filled, let us know, guys, so that way, the other, your colleague traders here in the room, they get to see the price you got filled at, and it serves a little bit as a reference as well for the ones who have not placed the order yet to be able to place the order. Let's say someone gets filled at 52. So why would you place the order at 50? You would go for 52, right? Let's say someone gets filled at 55. So why would you get the order at 52? You would go for 55. Let's say someone gets filled at 40. Well, then if you try 50, probably you will not get filled, okay? So that serves as a reference, okay? Lisa, since this is a Thursday expiration, is there any settlement risk? No, there is no price movement. I mean, the closing price on the expiration date sets the either exercise or assignment process for the option. And therefore, if you trade a market in a week where the market doesn't trade on Friday and therefore options expire on Thursday, then whatever happened on Thursday sets the risk of the trade. If there is trading on Friday, then the options market will be open on Friday, etc. So it's what it is, okay? So May 10, it's tomorrow, correct? And May 10 is Friday. So that sets your risk. That's it. Moshi, I wish there was two of you, one to cover future and one of you to cover for experts. I hear you, Moshe, and you know what? The other day I saw your message and then I realized I never responded to your suggestion. we need to do more forex trading, guys. Okay, and we will, Moshi. Okay, so we will we'll get organized to add more sessions. Some of those sessions will be either have more forex in them or be specialized for forex. So please bear with us as we are getting organized. But we will do that. We will do that 100%. You are 100% right. I mean, I personally love to trade derivatives, futures and forex. Futures and options. But I also personally love the forex markets, and there are many reasons for that. Number one, is a fantastic market to trade. Number two, even when I trade stocks or options or futures, the values that I see that I trade, okay, for example, 0.80 here, you know what? That's dollars. And dollars is a currency. So even when you don't trade forex, you are exposed to forex. So my intention is clear. I want to bring forex into you as well, guys, to help you to understand better the global markets around the world. And on top of that, now you have one more market to speculate. And if some of you, which I'm guessing that's your case, Moshi, you were to rely much more on forex for your income and your trading, then I'll be able to support you better as well. Okay, so forex is coming, my friends. That's the summary. Anyway, guys, I'm just realizing that we just surpassed the time of the session by 5 minutes. So I'm just gonna, unless you have a final question, I'm just gonna add a vertical line to this chart. I'm just going to make a copy of the chart so we can keep it for future reference. This is another thing that someday we need to do as well. The thing is that we only meet 3 times a week, isn't it? So we'll add more sessions because sometimes it could be quite helpful to do sessions for review, okay? And we'll look at trades in the past, trade that profited, trade that didn't profit, and get to understand what we did right, what we did wrong, what can we have done better, etc., etc., etc. That should be also very helpful for you guys, okay? Now, in the meantime, I want to say see you on Saturday. Our sharpening session this week, guys, it's not happening on Sunday, it's happening on Saturday. Okay, so if you don't know that, make sure you check www.tradewithufos. Make sure you look at the get together session where you can find the calendar. Okay, and you would see that May 11, notice how it's going to be Saturday, we are doing sharpening. And the reason why I'm pointing at something that you probably know already is because it's going to be a special session. Okay, we're going to be talking about calibration very much in depth. And then it's going to be open Q&A for anything you need. Okay, so of course, many of your questions, I'm pretty sure they will involve the use of the UFOs. And I'll be delighted to answer your UFO questions and so on. But some of your questions may not be UFO related. They may be risk management. They may be trend. They may be, I don't know, you name it. Whatever question you have about trading, just bring it to us. And we'll be talking about it. It's going to be, I would say, probably one of the most important sessions we ever did, okay? Because your feedback in the form of questions and my answers in the form of content hopefully really helps you to get a greater understanding of certain things that sometimes are subtle, and that subtle difference creates a major impact, okay? So I will see you on Saturday, and I'm very excited about that. Last thing before we go, everybody, guys, just give me a sec. Sorry, guys, I had to clear my throat. So before we go, very quick, when you look at your YouTube channel, okay, there is a beautiful, actually there are 3 beautiful buttons that I would like you to click. Thumbs up if you appreciated the session, subscribe if you are not, and most importantly, the bell. Because if you click the bell, now as we post videos and things, you get automatic notifications. And that will help you very much, especially as we start adding sessions in the future, etc., which we will. So please go ahead and click on thumbs up, subscribe, and the bell. And let me see. Bojan, see you on Saturday. Very good. Alton, the IBM trade. Okay, let's take a look at the IBM trades very quickly. So. Obviously, since the market has been going down, the IBM trade has been going down, okay? And this is very simple. The market has been going down and therefore more stocks follow, okay? Again, remember, you are in an options trade, with an expiration date which is further away from now. There is time before expiration for that stock to go back up. A little concerning is the fact that the next UFOs are much further away, but less concerning is the fact that the S&P has UFOs very close by, and as I said before, we have the VIX also approaching a red UFO. So what is likely to happen in the following days or beginning of next week or something like that? We are likely to have a market turn where the whole broad market goes back up and IBM should follow. Okay, am I gonna be right all the times? No. Is it likely to happen? Yes. So stick with the plan, Al. The plan of the trade was to hold it all the way to expiration, expecting reaching the target. And the moment that stock starts moving your way, then it's okay to add a stop and start managing the trade manually. But at this moment in time, IBM went against us, and since it went against us, there is nothing to be done but wait. Okay, wait, because you have other elements in the trade that are still part of the plan, that are still working for you, and therefore we gotta be patient. Okay, good. Bruno, can you repeat the time and the date? Yes, Saturday 11, and the time it's 9 a.m. New York time. Okay, every time I mention sorry guys, I made a mistake. 11 a.m. Sorry for that one. So Saturday 11 at 11. Okay, so Saturday 11 at 11. And you know, by the way, you have this very convenient button here where you can click and it would add this to your calendar automatically. Okay, so that's pretty cool. Anyway, everybody, see you next time. A pleasure to get together. And see you on Saturday. Okay, and by the way, if you cannot make it on Saturday, shoot emails to us with your questions. And we can certainly still cover and give you answers, and then you can watch the recording and you get your answers, okay? But of course, ideally, you would be there present on time, so that way, as you get your answers, if there is still, sometimes you have a question, you get an answer, and the answer generates a new question, so it's gonna be much better for you to be with us, okay? Anyway, see you then, my friends. Super pleasure, and see you soon.